Welcome to the DX Today AI Daily Brief. Today is Friday, March 13th, 2026. Let's dive into the rapid shifts and massive capital flows shaping the artificial intelligence landscape.
NVIDIA has posted exceptional fourth-quarter results, driven by an accelerating demand for data center infrastructure. The company reported a 73% year-over-year revenue increase. However, despite these strong fundamentals, shares fell more than 5% in post-earnings trading. Analysts note this reflects a maturing investment cycle.
OpenAI has finalized a historic funding round, raising $110 billion and bringing the company's total valuation to $840 billion. To put this in perspective, this valuation is equivalent to the 12th largest company in the S&P 500 index. The capital influx demonstrates continued, robust investor confidence in frontier artificial intelligence capabilities. Private capital appetite remains extremely strong, even as the timeline for ultimate enterprise profitability may still be years away.
Anthropic has secured an $8 billion investment from Amazon, marking a significant deepening of their cloud partnership. Crucially, this deal involves modifying Amazon hardware at the kernel level to be optimized specifically for Anthropic's artificial intelligence models. This arrangement highlights a growing trend where leading developers secure specialized cloud partnerships for intensive training needs. Hardware customization is rapidly becoming a key competitive edge in the complex race to develop and scale next-generation foundation models.
Microsoft is fundamentally adjusting its artificial intelligence infrastructure strategy. The tech giant has unwound its exclusive cloud provider partnership with OpenAI model ecosystems. By reducing its dependency on a single provider, Microsoft aims to mitigate concentration risks while significantly expanding the breadth of artificial intelligence service offerings available to its enterprise clients.
Capital expenditures in the artificial intelligence sector are reaching unprecedented levels. Amazon is currently projecting $200 billion in capital expenditures for its AI data centers in 2026. This is a massive increase from the $131 billion spent in 2025, placing Amazon at the forefront of hyperscaler spending. This explosion in expenditure underscores how infrastructure bottlenecks remain the primary constraint on scaling artificial intelligence, which is actively driving both energy and supply chain pressures.
Google is also drastically increasing its infrastructure commitments, planning between $175 and $185 billion in capital expenditures for 2026. This marks a sharp rise from its $91 billion budget the previous year. Google is aggressively expanding its footprint to capture a larger share of artificial intelligence workloads. Additionally, the company is actively signing smaller AI firms as primary computing partners, a strategic move designed to build long-term ecosystem lock-in.
Meta is significantly expanding its data center spending, estimating between $115 and $135 billion for 2026. This is a steep increase from $71 billion the previous year. Notably, some of these infrastructure projects are reportedly being kept off the balance sheet, indicating the actual financial commitment may be even larger. This highlights how transformative artificial intelligence compute demands have become for maintaining a competitive advantage in the social media and digital advertising sectors.
Elon Musk's xAI has secured a major GPU agreement with NVIDIA to support the rapid expansion of its data centers. This arrangement is reportedly similar in scale and structure to NVIDIA's existing $100 billion deal with OpenAI. The acquisition of these high-performance graphics processing units validates xAI's aggressive scaling strategy. This move further intensifies the ongoing compute arms race among independent artificial intelligence developers, as securing raw processing power remains the industry's most critical bottleneck.
Oracle is officially joining the Stargate AI infrastructure project alongside OpenAI and SoftBank. This ambitious $500 billion joint venture, which was recently announced by the Trump administration, aims to construct massive domestic artificial intelligence data centers. Billed as the largest infrastructure project in history, it signals a major shift toward treating artificial intelligence as a matter of national sovereignty.
The initiative blends public and private capital at a scale that is entirely unprecedented in the technology sector.
In an effort to diversify its hardware supply chain, OpenAI has launched a unique GPU for stock arrangement with AMD. This strategy is entirely separate from their ongoing partnerships with NVIDIA. By sourcing chips from multiple vendors to support its expanding data center projects, OpenAI is proactively mitigating supply chain risks. Furthermore, fostering greater competition between semiconductor manufacturers like NVIDIA and AMD could ultimately help lower the exorbitant costs of artificial intelligence compute power over the long term.
The open source development community continues to gain momentum with Liquid AI's release of its LFM 2-24B A2B open model. This new 24 billion parameter model adds to a rapidly proliferating ecosystem of highly capable open-weight artificial intelligence agents. This steady release of open models is drastically accelerating developer adoption by allowing for deep customization without prohibitive licensing costs. This approach directly challenges the dominance of closed proprietary systems in the ongoing development of specialized enterprise AI agents.
Moving beyond enterprise technology, a team of students has developed a novel application that uses artificial intelligence to help plants communicate. Featured today on the CNN 10 news broadcast, this innovative project translates environmental data from plants into conversational alerts for their owners. While lighthearted, grassroots applications like this demonstrate the broadening accessibility of the technology. It shows how creative, consumer-facing uses are beginning to see the next generation of everyday artificial intelligence innovations. That wraps up our briefing. For DX Today, stay curious.